for a 15-minute fireside. All right, so thank you everybody for those kind of sending over and mingling. If you could either sit down or be quiet. But thank you for coming to this fireside. I'm really excited to have Denelle here from Stellar. Do you want to give us just a quick intro on who you are and how you got to Stellar?
Sure. I'm Denelle Dixon. I'm the CEO and Executive Director of the Stellar Development Foundation. I've been there for 6 years, which feels like 25. And I came there because of the fact that a lot of what we do is this intersection between business, policy, and tech. And it's super interesting to me to be able to be at that intersection and to help new organizations really grow and support the ecosystem that Stellar is sort of known for.
Awesome. So Stellar, I think, is most known for, at least from my perspective as a venture capitalist, for payments and stablecoins. And I can think back to, I know you've been in the space for a long time. I have as well. We had ICO summer, we had DeFi summer, we had NFT summer. Now it seems like we're in stablecoin summer. Why do you think it's taken us this long to get to stablecoin summer? And what has changed over those many years that you've been in the space?
It's so funny because we always talk about the fact that we were doing stablecoins before it was a term, and it actually is true. When I first started at the foundation, we already had a bunch of fiat-backed assets on the network, and it was just hard. The liquidity wasn't there. We had all the infrastructure. It's been ready for years, but the liquidity needed to be improved. You really needed to have the integrations throughout, and so that has been it's all of that foundational work that needed to come into play. But honestly, I think what's really changed to make it stablecoin summer this summer is really the U.S. regulation being more open to it. I think that the regulatory environment in Europe also being open to it and really focusing on making that happen. I think that's just changed the dynamics, and now you have all these institutional players who are like, oh, we want to issue a stablecoin, or we want to leverage the assets that are on the network in a different way, or just figure out how to get involved. And I think that that's really changed the dynamic.
Yeah, I also think we owe a bit of debt of gratitude to Stripe for getting everyone excited about the space again. But
sure, last summer when they went to their conference and they said, we're back in crypto, I was like, thank God. And just the acquisition, Zach's company at Bridge, that's been a really nice thing to see. Demonstrates that there's this infrastructure, and the way that it actually makes things move much more quickly is so important. So I think that's been a great thing.
Yeah, it makes sense. What do you think has been the single most impactful thing to the technology? So you talked about regulation, but is there a piece of technology, or is it just liquidity from your perspective, or the ramps themselves, that have gotten us to this point where we're now seeing billions of dollars of payments happening on chain?
I think that it was, when I first started in the space, user experience was not a focal point. If you weren't crypto native, it was really actually complicated to use the tech stack. And so having more UX more designers and more UX focus in the products has been a really great development for the industry. So I think that is sort of one of the big pieces of it, is that we're recognizing that you need to solve problems for users, but you need to make it super easy for them. And they don't need to be crypto native. In fact, we might not even want them to know that it's crypto that they're leveraging, because that's not really the thing. When you use HTTPS on the internet to make sure your everything that you do is secure, you don't actually know that you're using it well, unless you look at in the browser and see it. Most people don't notice that. And so these are things that I think getting comfortable with that in crypto has been a bit more of, it's taken us a little longer to get there, but I think that's been the thing, is that we're now more focused on user experience.
Yeah, it makes sense. So take me back to the beginning of your time getting into Stellar. When, and you guys were so early, as you mentioned, when did you think, this is a technology that is going to be used for payments? We know this is going to happen. And how did you keep that conviction during what was, I think, many tough years?
Yeah, we always talk about I talk a lot about the fact that there's so many shiny objects to look at, and you need to stay hyper-focused on what you need to do. And I think we've done a really nice job of that at Stellar, despite the fact that it is hard sometimes, because you see so much attention getting pushed elsewhere, when I think we built the foundational pieces of infrastructure that needed to be leveraged. You needed to make sure that you had the asset issuers, you need to make sure you have on and off ramps, you need to make sure that you have liquidity. All these different components need to be there. And we were really hyper-focused on laying that foundation, and that's not sexy. And payments aren't necessarily sexy, although they're the ones that move, make make ecosystems move and make things change so much, and actually what users really care about. So I think it was that conviction that we knew. I think Jed actually knew this from the day that he started Stellar, and he sold me on that idea right out of the box in 2019. And I think for me, it was, we're going to make this happen, because you can see as soon as you travel outside of the US, outside of Europe, you see the absolute need for this technology, and you see the value that it brings, and you see the problems that it solves. And I think for me, once I saw that, I was like, we can do this. And so we just needed to stay focused.
So I want to double click on two things you just said. So one was, that you needed the ramps, you needed this infrastructure. There's two kind of ways to think about it, which one is that the chain itself and the ecosystem, you need to build it, right? Like you have to build it and they will come. And then there's other people who have taken the point or perspective that somebody else will, right? And what do you think Stellar's role has been or needs to be going forward to build all of that core infrastructure and the banking technology, the ramps, the compliance layers, things like that, relative to just providing the core technology layer?
I would love to say, if you build it, they will come. But we know, even in the movie, that line is famous for, it doesn't always happen quite that way. And so we need to think about, like, we always have been very aware that I do not want us to compete with the ecosystem and players in the ecosystem. I'm a big believer of open source. I've been that way for 25 years, really recognizing that there's a place for infrastructure and there's a place for foundations to support that. But then there's also the gaps that need to be filled by other parties. And that's what we look for, is how to help other parties fill the gaps. And so we actually create like those roadmaps to say, how many different companies do we need to come in and provide liquidity? How many different companies? And you need to do, like, if you think you need one, you need 5. And so we try to bring those companies in and try to support the work that they do. So we try not to we build a lot of the tech stack with the ecosystem, but we don't want to build those companies that are going to fill that void. We want to help other companies to come in and do that. And so I think that there has to be a balance between, if you build it, they will come, and you're going to help them to build it.
Yeah, I think we've definitely seen people switch towards understanding that you have to spoon feed people, and especially traditional markets.
And it's not just in crypto. This is exactly how the internet worked too.
Yeah, exactly. The other thing I wanted to double click on that you said is, when you go outside the US, it becomes abundantly clear. It's clear that that's been the story, that, call it the global South. They're the ones who are adopting stablecoins. They're the ones who are benefiting the most. But there is now a lot of talk about maybe also domestic markets as we think about more like programmable money and, other forms of use for stablecoins. Do you see that story, or do you still think it is a, emerging market story?
It depends on what you're talking about. For payments, it's definitely outside. And cross-border, it's definitely like you can leverage it in the U.S. to be able to send value outside of the U.S. But we have such great payment infrastructure in the United States and Europe that you don't actually really need to be able to leverage these tools, although people might if they just have it in their wallets and it's just simple to use, they'll do it. So I think that payments is like definitely a cross-border play. But if you think about everything else that we're seeing with money market funds and with those kinds of yield-bearing assets being able to be leveraged by people, and potentially maybe even moving to payment type assets, that is going to be part of what I think is going to take over like the West, and like that's going to be useful there. So the infrastructure is sort of available to do all of it, which is like the such crazy interesting part about it, right? It's not just built for one purpose. And it can be leveraged for all of these different purposes, but I think it just depends on the particular vertical that you're focused on. I love the asset issuance piece, and I love that what we're seeing with tokenized assets come into it, because it's not just because the tech is cool, but it's because it's actually solving these challenges and problems for businesses, and they're saving a lot of their internal capital, and they're thinking about deploying assets and people differently internally as a result of leveraging the tech stack, and that's pretty awesome.
Yeah, so you mentioned businesses there. We published a report with Artemis and Castle Island about a month ago or so that shows that actually B2B payments is now the biggest vertical within stablecoin payments. And if you look back 18 months ago, it was all peer-to-peer. It was a lot of remittance and things like that. How do you see that continuing to play out? Do you see B2B as that growth vector right now? Do you think peer-to-peer and remittance corridors will continue to be a growth vector, or is it just everything in between?
Well, the remittance corridors are going to grow, I think, pretty substantially as this tech becomes easier for people to use. Again, that UX piece coming into it and really focusing on solving problems for them. But the B2B piece is fascinating to me, and I think it's like one of the largest growth opportunities, because treasury, all businesses have treasury needs and things they can solve, and this technology actually really helps them solve it well. And I think that now, because, frankly, of regulation globally being more open to it, you're seeing so many companies think about, how can my treasury be simpler? How can I have money in different parts of the world and move it in a way that makes sense and that saves me time, saves me effort, maybe one ledger to look at, all those different components. So that is super exciting from a business standpoint. And also, I think that one of the things that's really important on this is, sure, it's going to help the large institutions, and that's great, but the small to medium-sized enterprises are going to be really impacted, and they're going to get a ton of value from this, and they already are, some of them. And that is like kind of what we love to see.
Yeah. On that point, so Jack Chung at Airwallex has been a little bit, he's been on Twitter criticizing stablecoins a little bit, saying that it's not actually cheaper, it's not better for his clients. A lot of his clients are, B2B, like SMBs, right, who are using these kind of alternative payment networks that are not stablecoins, but are, essentially just pre-funding liquidity in a bunch of different markets. How would you respond to that question or that challenge that stablecoins are not actually a better use case for those SMBs relative to what we see with like the Wise for Business and the Airwallexes of the world?
Well, I don't know the specifics around this, but I would just say that I don't know how it can't be easier, because most small to medium-sized enterprises can't have bank accounts all over the world. And if you had bank accounts all over the world, look at MoneyGram, look at Western Union, they have that. They're also leaning into this as an idea for Treasury, those larger institutions. But they actually have those bank accounts, and they can wire money easily between them, and they can move it in a much simpler way. For small to medium-sized enterprises that don't have that kind of liquidity globally, I don't know how this can't be simpler. So it's also, you shouldn't just use it because it's cool and it's now like stablecoins are the thing to use. You got to look at your business and say, what makes sense for me and where should I leverage it? So many times with new tech, people don't do that. And I think that enterprises that do that see the value from it. You always have to ask the why and answer that question instead of just the what. And I think that when you do that, you'll see the results.
Yeah, I think it's been clear, especially over the last 18 months, that people understand the capabilities now and they understand the value. There's also been a lot of conversation around the instant domestic settlement networks, right? So PIX, and we're going to have FedNow and SEPA Instant. What role do you think that those play relative to stablecoins? Do you think they hurt the potential story for why stablecoins are a good rail, or do you think they help, and can they be part of the payment flow?
It is always, well, first of all, the thing that's amazing about this is I don't think that would have happened if we didn't see the momentum that we see with crypto and blockchain and the leverage of the use cases there. So what does this do? This actually brings tons of value to consumers and small businesses ultimately. So I think it's amazing to see that there's been movement in that direction. And I think that interoperability has to happen, and we're already seeing movement towards that. So I think that there will, I've always said this, like even with blockchains, one blockchain doesn't win the whole market. One payment rail doesn't win the whole market. You have to have all of them in your toolbox and use the tool that makes sense for what you're doing in that moment. And if we don't think about it that way and we think we're going to replace it all, that's where we go wrong. And I think we're now to a space where you can see that all of these different things ultimately benefit the people that you want to serve. And so let's figure out how best to serve them.
Yeah, it makes sense. So we're sort of talking like stablecoin payments are here, and they are, and they're growing quickly. But it's maybe call it 150 billion of annual volume. That's relatively de minimis relative to the $200 trillion of payments that happen every year. How do we get to that, or how do we take most of that market, or a much bigger part of that market? What is still missing, or what just needs to happen?
It's so funny when you think about it. Like, I do actually think that stablecoins are here, and what's the next thing? I'm constantly in that because you have to think that way. Because I do think yield-bearing assets are going to be like a key focus, particularly outside the U.S. in terms of how to leverage those for payments and also holding them. I think that the way that we get there is, again, focusing on simplicity and ease of use and the why. If you don't ask the why, you're never going to get to the result that you want to. If you're just trying to integrate these things because it makes, like, you hear about it and you want to, like, have a different multiple on your business, then that's just stupid, because you're not going to get to the result you want. So I think that we're going to see this payment volume increase. We're already seeing the regulation improve globally in terms of what this looks like, and that's a lot of what we needed, was validation that it's going to be here to stay. Validation that we're here to stay has happened now, and I think the large enough regions that we're going to be able to move that. And we really do have to think about now, like, what's next? How can we actually take this to sort of the next level?
In 5 years, how much of the global payment system is on blockchain rails and using stablecoins?
I'd like to say 50%. I'd like to be able to say in 5 years we'll get to there, because I just think it's going to be ease of use. I mean, that's probably aggressive, but it doesn't take a lot. It doesn't take a lot of us to get there. If you think about, I used to, when I was on the website, the content side of the technology, we used to think, like, how quickly is it going to be that we're going to see most of this online? It didn't take that long for that to move to that. So it's getting, like, the adoption and the comfort level with it, and then I think it just happens.
How would you respond to the criticism that, like, smart contracts and blockchains have existed for 9-10 years now, and we're just now seeing $100 billion worth of annual volume, and clearly, like, it's been slow, right? Do you think that's actually true?
It's so funny. I think that you got to crawl before you walk, before you run. Thank God we didn't run right out of the box because there were so many problems with it. I don't actually think it's that long. And in terms of the tech, yeah, it's been a long time. But in terms of like getting everybody comfortable with using tech like this and us focusing on the UX piece of it, that's like 2 years, really, that we've actually done that. And so it hasn't been that long. And it's good for it to take some time so we can iron out the bugs and make this real.
All right. If stablecoin payments don't work, what happened?
I don't think that that's even an option. So I don't think I have to answer that because I think stablecoin payments already work and we're seeing tons of volume there and we're going to just see more.
All right. I think we should end on that bullish note. All right. Thank you, Danielle. I really appreciate it.
Great. Nice to see you.